right, Dean, welcome to the WealthTech podcast. I am excited to have you on the show. Today, we're going to be talking about a couple of my favorite subjects, certainly AI, but also the modern family office. How is AI impacting family offices? Is AI forcing family offices or driving family offices to modernize? Certainly, you have the next gen trend. We got a lot to dig into today. Before we get into it, would you mind giving our audience a quick introduction of yourself and Asseta AI?
Yeah, sure. Thank you, Mark. I'm Dean Palmiter, the CEO and founder of Asseta AI. Asseta is the intelligent family office suite. We're a purpose-built accounting platform designed for family offices who are managing complex multi-entity wealth. We were started just about 3 years ago in January of 2023. We're a group of experienced financial technology and family office professionals. So we're bringing modern architecture, intuitive design to a small but fast-growing market that's long been underserved by traditional enterprise software systems.
It certainly has been a market that has a lot of legacy software in it, right? So it's great to see, I think, two trends happening there. One is purpose-built software for the family office market, which is fantastic, and you're seeing more and more of it. And then also you have this kind of second mover advantage where you're on kind of a completely modern platform, AI native. You don't have necessarily the legacy or the tech debt that maybe a legacy platform would have for you. That you've recently secured some a round of funding. Could you tell me a little bit about that and how that will accelerate and impact your vision?
So up until now, we've been completely, I would say, grassroots backed by
Friends and family type of
friends, family, customers of ours. And just recently, we secured investment from two amazing fintech and wealth tech focused venture capital firms, Nika Partners and Motive Partners. So the two of them both co-led our Series Seed, contributing 1.5 million each. We also had participation from a Fortune 500 president. We also had participation from Tanya Neild, Dr. Tanya Neild of Infogreat. So we have raised a combined total of $4.2 million for our Series Seed that we'll be announcing on November 12th.
Well, congratulations. I think that is exciting. Certainly, Tanya Neild is one of the best and the brightest in the industry as well. So if she's backing you, that's the gold seal there. Tell me how this how this funding is gonna impact your firm going forward.
So we built everything that you see today, everything that our customers use, with one engineer, my CTO and co-founder Daniel. So Daniel wrote over 150,000 lines of code himself. We spent 3 years designing and building the general ledger to get it to where it is today. This funding has enabled us to quickly ramp up our engineering team from one person to now 7, 2 people in product, 5 people in engineering. So we're now a 12-person company, and more than half of us are just focused on product and engineering. So it's going to enable us to execute faster on our vision. So taking the foundation, the core that Daniel has architected, combining that with our vision and our customers' desires to execute faster on our product roadmap and deliver the absolute best modern all-in-one family office platform for our customers.
Love it. So now Daniel can come out of the basement and see daylight, and
he's actually
get a day
he's
off.
He's actually managing a team now, and he's able to be more strategic with me, which is great. We can focus on partnerships. We can focus on just architecting the next modules and really thinking from a strategy perspective. So yeah, Daniel's out of the basement and he is upstairs with me, focused on the vision and laying that groundwork so that the very talented engineers that we've hired can just execute.
Fantastic. All right. Well, congratulations on that.
Thank you.
Dean, every time I get a chance to talk to a founder, I love to hear about their founder's journey. Can you tell me a little bit about that? Why did you start Asseta? And looking back on the 3 years of it, kind of where did the journey go? What was unexpected that you maybe it was a little bit harder than you thought? And then what did you learn that you didn't necessarily think about was starting out?
Okay, so I grew up in a very entrepreneurial household. My father, very entrepreneurial. He grew up on a farm, raising pigs, breeding dogs, selling Christmas trees, trapping animals. And then his father, my grandpa, he was a Navy SEAL diver who worked on submarines. So incredibly focused, determined work ethic coming from my dad's side. And my dad is a master salesperson. So my dad ended up starting multiple successful restaurants in Philadelphia and New Jersey. He married my mom, who is fifth generation ice cream royalty in Philadelphia. I'm half joking about the royalty part, but my mom's family did found America's oldest ice cream company. So my great grandpa started Bassett's Ice Cream in Philadelphia in 1861 with a mule walking around in a circle in his backyard churning the ice cream. So it is one of few American businesses that has successfully been passed down 6 generations. My dad sold his restaurants when I was younger to start a career in financial services. He went on to be very successful in financial services sales, and he ultimately started and sold a fintech company. So I got my work ethic and sales education from my dad, and I learned about family legacy and from my mom's family. But I've grown up with an insane fire inside me since I can remember. And it probably started when I was 12 or 13, always wanting to be independent, outside the control of my parents and authority figures. So I've grown up wanting to chart my own path with a very Gen 1 mindset. It was because I would have to build my own family and my own success. So a younger, more ambitious and tenacious version of me probably felt the need to prove myself that I'm actually an entrepreneur myself. And so when I found myself working in corporate America for Oracle and working for Sage, I found it really hard for me to sit still. So while others in my class were patient and careful to not rock the boat at Oracle or Sage, I wanted change and I wanted results and I wanted speed. And I realized Sage is not going to innovate or pay attention to the family office market. I actually need to go out and build this myself. So that's really the kind of personal background blended with the professional early career development and realization for the gap in the market of coming to the realization that I'm an entrepreneur at heart. There's a need in this market. The legacy incumbents aren't going to change. I need to go out and build this company myself. And so I set out, partnered up with Daniel, my co-founder and CTO. It was just the two of us, less than 150 grand, built a prototype, got our first customers 15 months in, worked really hard to make them happy, added a third customer, slowly added a fourth and a fifth. And then all of a sudden at the beginning of this year, we exploded from 5 customers to 23 overnight. And we had 2 small clients, not really the core ICP, to now serving several billionaire families and dozens of ultra high net worth families, managing a combined $10 billion plus in assets on platform. So it's been long, hard, very difficult. Daniel and I have paid ourselves each less than minimum wage for 3 years. We've crawled, we've chewed glass to lay that foundation for the company. And so for the majority of the history of the company, it was just the two of us. And then the team was 4, and then 5. And now all of a sudden went from 5 to 12, 2 customers to 20 plus. And with that came a lot of interest from investors. So that's a little bit about the journey. Was that?
They often say those overnight successes are years in the making. So appreciate you sharing that journey. What was one thing that you look back on the 3 years that was surprising to you that you didn't know about going into, or wish somebody had told you about it?
The part that surprised me is how hard it is to actually raise money. You are on LinkedIn or you're reading news headlines about young kids raising millions of dollars. This is a golden age, AI. We saw the internet.com bubble. We saw, so we've seen markets be exuberant. Had an internship in 2014 in Silicon Valley where there was a company that raised over $1 million for an app that was called Yo, and all it did was allow you to send a message that said Yo to your friends, and they raised over $1 million. So it seems easy on the surface, but raising money is actually really hard. There's only a few hundreds or a small amount of thousands of companies that get funded every year. And VCs are really pattern matching. They're looking for $10 billion plus outcomes, and they're pattern matching. So it's easy for them to only look at startups who were co-founded by best friends in a dorm room at Harvard, or a Stanford dropout who was accepted into Y Combinator, or a second-time founder. So if you're not one of those three, it's very hard to get the attention of VCs. And I'll say it's even harder to build a purpose-built platform for family offices. And that's why family offices have been so underserved. And they're forced into general purpose, generic enterprise software systems like Oracle, NetSuite, or Sage Intacct, because those platforms are trying to be everything to everybody.
Horizontal markets.
Horizontal. What we're doing is we're focused on a niche. We're focused on a market that some say is as small as 12,000 or 17,000 family offices. So convincing a VC that actually this market is growing faster and bigger than you realize, and the opportunity is a multi-billion-dollar outcome. So raising money took longer and was much harder than I anticipated. But now we found 2 amazing partners, and that conviction that we built up in them, it was really about, as much as it was about them finding a needle in a haystack, it was the same for us, as finding that right partner.
I think it's, that family office market, it is a quirky market. It is, the data on it, the addressable market, because they are private, they don't register.
That's right.
Necessarily the hard numbers on that. You see that the kind of the range from 3,000 to 10,000. I feel like that 3,000 number has been out there forever. And I think probably the 10,000 number, especially globally, is probably a more accurate one. And it's a harder market to sell into, right? It's something that you need to be invited into. You can't necessarily
That's right.
traditionally sell your way in, and the buying behavior, because they are cost centers, is a little bit different.
Absolutely.
More event driven than maybe ROI driven.
That's right.
But then you also have the overlap of the multifamily office, which I do feel like is the business model that's having a lot of success these days. You see maybe a lot of families going that route and say, maybe this is a better option for me than the traditional starting their own single family office. Certainly there's the number of wealthy people has increased. So there is a need and a want for holistic service, family office style services, whether it be on the RA side or on the single family office side. In terms of common client problems, what are some of the problems that family offices are coming to you with, the kind of regular reoccurring themes that you're seeing? And then, has any of that shifted over time?
Sure. Well, I'll just go back to make a comment on what you were saying about the market size. So you threw out a number 3,000. We already know that there's more than 3,000 billionaires globally.
Right.
That's a small number, right? But every single one of them needs a family office. No doubt about that. Then you have 200,000 ultra high net worth individuals who have more than 50 million in assets under management. So you can see how very quickly the number exploded from 3,000 to 200,000 when you start to go down market. Going to back to the problem that they're coming to us with, it's a data problem. You've got family offices who are invested across a broad spectrum of asset classes. They've got public investments and private investments. So they're not only investing across real estate, but they have stocks, bonds, gold, cash. But then they also have private markets, direct investments, private equity, venture capital, hedge funds. So those are all very different. And you've got the multi-entity problem where you have family offices that have dozens, if not hundreds of legal entities creating data silos. You've got many bank accounts, often as many bank accounts as there are legal entities, if not more. You've got brokerage accounts, you've got credit cards. You might have an operating company or multiple operating companies. So you have this complex data problem with disparate software applications and investment structures that are causing data to be fragmented and siloed. So it's a data problem that families are coming to us with. It's also a technology problem because there are no purpose-built family office software platforms that can be implemented and used by a 1 or a 2 person team. But at its core, it's a data problem, and software can be a solution to that. But you have to implement it correctly. You have to integrate it with the other applications. You have to unify the data model. So it's about aggregating the data, normalizing it, centralizing it, securing it. So it's a data problem at its core.
Yeah, I think these family offices are drowning in data. And as you know, data is so important these days. Data is the new oil. But if you can't harness it, if you can't consolidate it, if you don't trust the quality of it, then it just causes all sorts of other issues because it's in spreadsheets, it's silos per entity, per application.
It's really difficult to pull a consolidated balance sheet and an income statement. And that could cause a whole host of issues around tax season or getting a loan from a bank, managing liquidity, knowing how much cash you have on hand, making capital calls, making deals, investments. Having your data fragmented leads to an incomplete picture and a lack of clarity and a lack of scalability.
And it introduces risk, right?
Absolutely.
You don't know what you own or how much cash you have or how much you have in terms of liabilities, and matching that versus your liquidity. Family office could end up sideways. I mean, especially given their high concentration in illiquid assets like real estate, private equity, those type of things. That mismatch can cause real problems for family offices, and they can spend a lot of time trying to manage that situation. Talk to me about AI adoption within the family office. Obviously, I think all industries are being impacted by AI. The family office industry is no different. But what you tend to see with the family office is maybe a little bit of a laggard approach. And I think sometimes it's a prudent approach. They're not going to be the bleeding edge early adopters on technology. In some cases, they a little bit more of a reserve profile. Certainly the amount of resources that they have plays into that. But when you're speaking to family offices, some family offices, I'm sure, are eager and are adopting AI. Other ones are hesitating. What do you see in terms of, are you seeing two camps, and what's driving that kind of separation or divide?
Well, what I think is really unique about AI and the excitement that we see around this innovation, it's very different than what we saw with crypto, digital assets more recently, and even different than what we saw with cloud. So I've seen, with my experience at NetSuite, the transition from mainframe accounting, meaning putting your accounting on data centers that are actually on premise to moving your sensitive accounting and finance data to the cloud to now what we're seeing is this AI native movement. To your point, family offices are laggards. They are traditionally notoriously known for being slow. Most family offices are still using an on-prem version of QuickBooks Desktop. They are the last ones that are left in the QuickBooks customer base who still hasn't moved from desktop to the online version for many reasons. But a big part of that is security, privacy concerns. So yeah, they are laggards without a doubt. What's interesting to me about AI is that nobody is disputing the power of this innovation. We saw a lot of resistance to Bitcoin and digital assets, a lot of skepticism, rightfully so. With AI, I'll talk to a 70-year-old who thinks it's the greatest thing and they're using it in their daily lives. And they're investing in AI startups. AI has so quickly become woven into our everyday lives and become mainstream. Whereas cloud accounting has been around since 1998, 1999 with NetSuite and Intact, which were the first.
Yeah, movers. 25, 30-year migration. I think it really took a good time to COVID that got to finalize that cloud.
That was right. That was the nail in the coffin. That was the last kick in the butt where
right. I couldn't get into the office, and now that on-prem didn't seem so great.
That's right. So in 2015, when I started my career at NetSuite, I was still convincing people to move their accounting to the cloud. And NetSuite had been around already for 17 years. Family offices are still moving off of QuickBooks Desktop to cloud-based platforms like Intact and NetSuite. So yeah, they're laggards. But what's interesting to me is this new wave, this AI native wave, I think is coming way faster than cloud did. It's not going to take 17 years or 25 years. It might take, 3, 5, or even 10 years, but it's coming fast and it's going to be expected to be core to the application. So any company that was architected and built on legacy infrastructure from the late 90s is going to struggle to keep up with the AI native systems that are being born today. So I'm not thinking about so much as where AI is right now. I still think it's very early days of AI, despite how powerful it already is. I think that there's still a lot to figure out. There's a lot to figure out on how it'll be secure, private, governed. So it's early days, but there's no question about it that in 3, 5 years, it's going to be expected that it's throughout the application layer.
Yeah, I think it's one of those things that it is. We are early on, maybe first 3 innings, but I don't think this is a 5-hour ball game. I think this is something within 3 to 5 years. I can't imagine where it is going to be in 7 years. Let's put it that way. I think the acceleration is so fast and it's accelerating that this is going to be a quick process where, it's going to be a before and after type of event. And I think
that's right. There's
it's like electricity. I think it's a better example than maybe the technology like the internet, the cloud. Like, no, this is like, the advent of electricity.
It is a utility and it's going to be plugged into everything. So it's going to be powering every single device, every single application, and it's going to get faster and it's going to get cheaper. So only rich people were able to afford electricity. Now it's as cheap as water. Same thing with AI, to your point, just to stick with your analogy. So it is getting smarter at an increasing pace, and it is getting cheaper and more capable.
Tell me a little bit about the relationship between AI and data? Why is Why is having good consolidated quality data so important to get the results that you want out of AI?
AI is useless without good data. So we were talking about the data problem before. Family offices have a real data problem. They can't even get their data into a centralized database, oftentimes across their many bank accounts, brokerages, and entities. So uh, AI, as I said, it's literally useless without good data, and it needs a comprehensive data set. So if you want to get good results from AI, you need to give it as much of your data as possible to have a complete picture, right? So, for example, if you want AI to forecast your cash flows, that means you need to be pulling in data from your brokerage accounts, your bank accounts, and all of your illiquid investments. But you need to combine that also with your expenses and your bill pay and your cash on hand across your many bank accounts. So you can't expect AI to be able to forecast your cash flows with just one piece of that puzzle. You could say, oh, look at all my illiquid investments across all my private equity and forecast my cash flows. It can do that, but it's not going to give you the most accurate answer because it's an incomplete picture. So, for one, you need to have good, clean data in a centralized place for a comprehensive picture. So that is what AI needs. It needs a complete picture and it needs good, clean, centralized data.
Yeah, I think these firms that are looking to more broadly adopt AI, in some cases you already see them doing it, but if they're not, they could look at data governance as a key component of that. Because to your point, without good, clean data, holistic, consolidated data, it's kind of worthless.
It's the same. It's the same thing as an ERP migration.
Garbage in, garbage out. That
garbage in, garbage out. Right. Whatever you feed the AI, it's going to spit out. It's not going. I mean, it could take unstructured data and make it structured, but yeah, it's garbage in, garbage out, full of hallucination, incomplete. So.
Right. Yeah, trust the results. On the flip side, I do think when you get quality data in, the data that comes out or results comes out, it's far greater than your traditional.
That's right. And also when you focus the AI on a particular data set, you tell it, okay, pick, these data sources to formulate your answer, you get a much better response.
And it could do things just so much more rapidly than you were able to do in the past. I think you can do things, certainly with large language models, the ability to have a conversation with your data. It was one of my favorite subjects here. One of the things I've been thinking about a lot is the modernization of the family office. What will AI cause the family office the modernize? I think you certainly have seen a professionalization occurring within the family office industry, especially over the past 5 or so years. But talk to me about what you see in terms of the family office industry and how AI will impact the modern family office.
Okay, so there's a lot of trends at force here. You've got over $100 trillion changing hands, the great wealth transfer. You've also got a vast amount of CPAs retiring in the next year. So in the next 10 years, more than 75% of CPAs will retire. It's making the family office talent market incredibly competitive. So CEOs, CIOs, CFOs of family offices are coming from hedge funds, big banks, big consulting firms, and they're commanding top dollar. Okay, you want me to come work for your family office? You need to pay me as much as my hedge fund pays me. So you've got really expensive payrolls. You've got this crazy war for talent, a shortage of CPAs, a generational shift of who controls the money. Millennials grew up with the internet and technology, social media, iPhone, Apple products. They expect a digital first experience. And so all these trends are leading to the digitization of the family office, the modernization. And family offices are forced to do that because they have to do more with less. Going back to the 2 to 7 employee average, family offices are lean. They have to be efficient. The CFO has to play the role oftentimes of the CTO and the chief data scientist. So you're having to wear many hats. You're having to evaluate, select, and implement software and organize data. So we're talking about being forced to implement technology so that they can be more efficient, do more with less, scale. And you've got a generation who expects that digital experience, that they're not afraid of the cloud. They're not afraid of AI. They want a personalized experience. They don't want to use their grandparents' financial advisors. They want to bring things in-house. They want to have real-time visibility. It's all of these trends working in our favor, and forcing family offices to modernize. So if you want to be able to leverage AI, okay, you have to then put your data in the cloud. You have to get your data organized. They're being forced to stay. And it also goes to staying competitive, both from a talent perspective, but also from an investment perspective. Nobody wants to work for a family office that's using antiquated technology and spreadsheets. How are you going to convince a hedge fund manager or a banker or consultant to come and work at your little family office that doesn't have things organized and have good technology? And then how are you going to be competitive by finding the best deals, the best investments, and allocating your portfolio correctly if you don't have the right technology, the right tools to identify those opportunities in the first place? So I think it's a combination of factors.
I think it is. There is a confluence of factors that are coming to a head. I think AI probably just adds, wind to the sails on some of these trends. Like you have the next gen, they say most of these family offices and even like your parents' advisors, 80% move on and either create their own family office or get their own advisor. So that's just going to happen. So they're going to be starting in their own family office. So you have this next gen that is digitally native, that they haven't experienced at the bank or at their brokerage firm that's online and in almost real time. And then they go to a family office and there's kind of this disconnect. And I think also in terms of your point, in terms of labor, in terms of talent, family offices always had to do more with less. AI is going to enable that, but certainly you see talent at the top end is really expensive. At the bottom end, I think that the next generation or the younger generation coming out of workforce, they don't want to rekey stuff into the Excel. They want to have more meaningful work.
Absolutely not. Yes, and the Gen 1 who made the wealth wants Gen 2 to be involved in the family business or in the family office. They want their kids to be financially literate and engaged. But the younger generations, rightfully so, don't want to engage when they take a look under the hood at the technology that the family office is using or the lack of technology.
Talk to me about AI in privacy. Obviously, this is something that you've got to do a great deal of thinking about. But how should family offices be thinking about keeping their data private when they're using AI? And what sort of policies and guardrails should they have in place?
Okay, so first and foremost, you can't have a successful software company these days unless you're SOC 2 Type 2 compliant. It's just table stakes now. So early on, we invested the money, we invested the time and the energy to become SOC 2 Type 2. So that's a big deal, but it's also becoming the norm, expected, and table stakes. So when we evaluate implementing AI, it has to adhere to SOC 2 Type 2. We can't even consider using AI that isn't going to enable us to uphold that status. So we're not willing to compromise on our SOC 2 Type 2 status, first and foremost. Secondly, every family office wants to figure out how they can leverage this technology. They don't want to be feeding their data to some cloud or big tech company and training the models and their data being leaked. It's just not something that they would even entertain or consider. The AI has to be SOC 2 Type 2. and it has to be able to be run privately. So that often means not using the free versions of these AI products. So don't go to ChatGPT and just use the basic freemium version. You've got to buy the enterprise, buy the business level edition, and ensure that it is private.
Well, I think too, one of the things, one is I totally agree on the SOC 2 Type 2. It's expensive, but it does demonstrate that you have controls in place and that you're audited to that. And I think it is a benchmark. It's a beginning. It doesn't mean that it's the end all be all, but it is kind of you need to clear that hurdle. That's a basic benchmark, stamp of approval. Okay, check. The other thing I think too in family office when they're thinking about AI is that they need to adopt AI because you need to worry about shadow use of AI. So if you didn't get AI or you didn't get the enterprise version of AI, guess what your employees are going to do on their phone or they're going to do at home? You gotta really, it's like Jurassic Park. Like it's gonna escape. Like you gotta give them an option and give them viable tools around AI in which they can use it in a secure and private way.
That's right. Mm-hmm.
And I think the other thing too is that in a lot of ways in which family offices are going to end up adopting AI is because they're the platforms they use are going that way. But there's also, I think, a need for just a regular holistic AI that I think it makes sense. Like you need to be careful. You need to have a policy in place. Like you can't just be, hoping for the best or be so restrictive that other things are going to happen.
I think a lot of people misunderstand or don't realize this about SOC 2, Type 2, is it's not just about the software itself and penetration testing and security, reliability, redundancy. It's actually about policies as much as it is about the tech itself. So the policies that your employees adhere to, onboarding employees, offboarding employees, the devices that they're using, how the devices store sensitive documents and how those documents are disposed of. So there's all these policies and procedures. So part of it is the tech, but another part is also the policies and procedures in place. And to your point, SOC 2 Type 2 is the starting point. One of the things that we're using our money that we've raised is to invest back into security. So we invested in SOC 2. And so I asked, okay, what's next? What's the next thing that we can do to really differentiate ourselves, but also demonstrate our commitment to data security and privacy and our forward-thinking nature of AI? And one of the new things that has come out is ISO 42001. It's a new international standard. It's the first of its kind for artificial intelligence. So that's something that we're investing in. And it's a framework for organizations to responsibly develop and use AI. So it helps AI from a risk perspective, ethical perspective, and then complying with regulations by establishing requirements for the software itself.
Let's talk about the future of family offices. What does the future hold looking 3-5 years out for the family office marketplace? What do you see? Let's put it this way. What do you see changing? How do you see the family office evolving? And then what is the one thing that's not going to change, that's going to remain constant?
I can't read the future, but I can tell you that there's 3 times more family offices than there were in 2019. Family offices have been around for hundreds of years, but they are booming in popularity right now. So I can tell you that there will be more family offices. I can tell you that more people are going to want to do more themselves. So yes, they're still going to manage their money across Goldman, Morgan Stanley, JP Morgan, but they're going to want to bring things in-house for control, for visibility, for autonomy. I think that AI is super interesting in helping uncover investment opportunities and helping manage liquidity, and then also automating a lot of the tedious parts that are not the sexy parts of a family office, like paying bills and reconciling bank accounts. So a lot of automation, a lot of AI from a investment due diligence perspective, but also portfolio rebalancing, liquidity management, document management, estate planning, insurance, bill pay, banking. We're going to literally have agents doing a lot of the manual, tedious, error-prone, time-consuming, unscalable work that has traditionally made family offices unappealing.
Yeah, I do think it's going to be. Those are all really good points. I think the capabilities and the functionality that they'll be able to access will continue to the come down market. They're going to be able to do a lot more with a lot less.
Totally.
I think
Yeah.
the popularity of the family office business model is a winning model, and there's going to be more of that. And I think the thing that's not going to change.
We're going to see more family offices because it becomes more accessible, right?
Yeah.
Where family offices used to only be available to the Dahlias and the Soroses of the world. But now everybody who has 300 million has a family office. Okay. That bar is coming down with the accessibility from a technology perspective to do more with less. So
yeah, I think that number it continuously crept up. I think you're going to see that democratization of that family office model start to come back down again.
You're going to see the $80 million guy who likes to do direct investing and has a lot of real estate and short-term rentals and may even be invested in a hotel. They have the complexity of a $500 million family office. So they can do more by running the software, running the AI themselves. And they're still going to manage some of their assets across those private banks.
And I think the one thing that's not going to change, will probably be even get more amplified over time, is the human connection. I think one of the reasons why people have family offices is that maybe it's not the most efficient business model in the world, but it's a trusted business model. There's they become really, valued members of that family and really help that family a great deal. I think that human connection, that human relationship, AI will help amplify that, because these people will be able to spend more time on the things that are more important. But that's the thing that's never going to go away with the family office. What ultimately, at the end of the day, why people create family offices for their families will become, even more germane and more important. And the AI is not taking that away.
I agree completely. We talk a lot about technology. We talk a lot about investing. What is the point of all of this? And it's to establish a more peaceful, harmonious, loving family unit and hopefully prepare the next generations with the right set of values and skills so that they can pursue their entrepreneurial spirit. They can make their impact on the world. I think, to your point, it's never going to replace the human element or the human interaction. Establishing a family office to serve the needs of the family and also to interact with other families. We see a lot of families going to family office conferences, and the number one reason why they go to in-person events is to connect with other successful families, learn from them, form relationships with them, invest together, grow together. So, yeah, there's no replacing that with technology.
And peer-to-peer interaction, right? It's so important. I like to end these podcasts on a personal note with 3 questions that have nothing to do with WealthTech. Let's start with Gicento, but how do you use AI in your personal life?
I mean, I use it for search, so I'm not going to Google anymore and asking Google questions. If I want an answer to a question that I have to educate myself, I'm going to ChatGPT, Claude, or Gemini to ask a question. And that could be like something as simple as, tell me the history of this event in history or this movement, or it's like Wikipedia or Google, but better. And then asking it to do things like optimize my vacation with my wife that I'm taking in the summer. We really value these 3 things. We want to see sights. We want to have good coffee and have good meals. So optimizing anything from a travel plan or make me a recipe. I use it to make myself smarter. It's like an assistant, right?
Yeah, it can really be helpful. Itineraries are
yeah. How are you using AI in your life?
Well, I did this morning. I got an interesting example where I'm a few nights short on getting Marriott Platinum status. So I
Okay.
asked AI to do like a cost benefit analysis. Like,
Right.
say if I spend enough to go to get the extra nights, is it worth the additional benefit of getting, platinum or whatever? And it broke it down. It broke,
That's the thing. And that's a really great example. Like the vacation optimization. It's like you can give it a task, then it'll optimize it for you.
let's talk about you live in New York City, one of the great cities on the planet, never mind the US, one of my favorite spots. What is a spot in New York City that you love that people might not know about?
That they might not know about. I'm pretty sure everybody knows about these spots. But I live on the Upper East Side. So I love being able to go for walks in the morning during off leash hours with our dog. And we'll go to our favorite coffee shop across the street or to Ralph's at Ralph Lauren, the coffee shop. And for dinner, I really like Elio's Italian. It's a neighborhood classic Italian restaurant. I also like JG Mellon, best burgers in New York City. And so I like the classic New York spots. Uh, Everybody knows about them. But I enjoy, just going to a good coffee shop and having a good walk in the park with my wife and my dog.
It's such a great walking city. I won't get into the debate whether Little Italy versus Boston's North End is a better Italian area, but we'll save that for a different podcast. Um, my vote's the North End. The book that you've read recently that you'd recommend?
Well, I recently read 0 to 1 by Peter Thiel, but any entrepreneur should read that. There's another book that has a kind of a harsh title, The Subtle Art of Not Giving a F. It's so
Very
easily
popular.
it is
Yeah.
popular one, and I just finally picked it up and read it. And I think one thing I learned from that is there's struggle for all humans. That life is just full of struggle, and so you want to be upgrading your problems, upgrading your challenges, right? So more money, more problems, right? It's like, okay, there's never no struggle in life,
Right.
but you can upgrade your problems. And then secondly, if you're going to struggle, pick your struggle. I think of building a general ledger accounting software as something that's incredibly difficult to do. So I have a ton of respect for Alex at Summit and any other entrepreneur innovating in the family office space, and particularly trying to build an accounting software. It's very difficult to do. So to me, I think of it as like a journey, picking something that's really difficult, and it might take a decade or 2 decades or 3 decades, but setting your sights on it. And so picking that struggle.
Great. I think a couple books, The Hard Things About Hard Things. I want to say it's Mark Anderson. Talking about scaling and why it's so hard to scale a business is a really good one. I'm reading currently Unrivaled, Michelle Heath, who I actually had the chance of working with back in the day at Fidelity. It's a really good book on trying to how firms can grow and what it takes for a firm to grow. And I could just find a really interesting subject because it's not. Anyways, this has been great, Dean. I really appreciate you being on the show.
Thank you for having me, Mark. Hopefully, I gave you some good content, and I really appreciate the opportunity. So let me know next time you're in New York City, and we'll either go to one of your favorites or I'll take you to one of mine.
We'll do it. All right. Thank you so much for watching this episode of the WealthTech podcast. I appreciate your viewership. If you found this episode insightful, please like. Also, please subscribe so you don't miss future episodes. This episode is brought to you with the generous support of Risk Clarity. Risk Clarity simplifies the complex for family offices. Thank you for watching. Take care.